Hello everyone and welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today is November 11th, 2025, and we are looking at the QQQ after a massive rally yesterday. The big news driving the market is the optimism surrounding the end of the historic 40-day U.S. government shutdown. Yesterday, this news sent the Nasdaq Composite surging over 2.2%, its best day since May, as investors piled back into risk assets. This tech rebound was led by AI leaders like Nvidia and Microsoft, which snapped an 8-day losing streak. There's a lot of positive sentiment in the air, with some analysts pointing to seasonality and strong earnings growth as reasons for a bullish year-end. We're also hearing talk from Fed Governor Stephen Miron about a potential half-point rate cut in December, which is adding fuel to the fire. However, it's not all sunshine and rainbows. There are growing signs of skepticism, particularly around the AI trade that has propelled this market so high. Credit default swaps on some speculative AI companies have been surging, signaling that investors are pricing in higher risk. Furthermore, some analysts, like Sean Pecci of Ranmore Fund Management, are sounding the alarm, calling the market dangerously overvalued and drawing parallels to past bubbles. He specifically points out that the Magnificent Seven stocks trade at extremely high valuations when looking at free cash flow instead of just net income. So we have a classic battleground, a powerful, news-driven rally clashing with serious valuation concerns. Now, let's see how this narrative is playing out on the charts. Looking at the daily chart for QQQ, we can see the broader context of this market. The price has been in a powerful uptrend for most of the year, running from a low around $402 in early April to an all-time high just under $638 in late October. That all-time high near $637 is now the most critical resistance level to watch. After hitting that peak, we saw a pullback over the last couple of weeks, with price dropping towards the $610 level before finding some footing. Yesterday's candle, for November 10th, is a very strong, bullish candle that closed at $623.23, almost completely erasing the losses of the prior week. This move directly correlates with the positive news about the government reopening, showing how quickly sentiment can shift. Immediate support can be found at the recent swing low around $598, which was tested during last week's downturn. A more significant support zone sits around the $570 to $580 area, which acted as a consolidation range back in August and September. For the bullish case to continue, we need to see price hold above the recent lows and make a convincing push through yesterday's high of $624. If we can clear that, a retest of the all-time high at $637 is highly probable. On the bearish side, a failure to break yesterday's high could lead to consolidation or another leg down. A break below the $598 support level would be a major red flag, potentially signaling a deeper correction. Let's zoom in on a particularly interesting period from earlier this year to understand the market's character. Here in early April, we can see some extreme volatility. The QQQ experienced a sharp plunge from around $476 down to nearly $402 in just a few days. This was a brutal drop, but look at the recovery. On April 9th, we saw a massive 12% single-day surge, completely reversing the bearish sentiment. This highlights the buy-the-dip mentality that has been prevalent, where sharp sell-offs are met with aggressive buying. Understanding this past behavior is crucial because it shows the market has a strong underlying bid, even in the face of fear. Now let's switch to the 1-hour chart to analyze the recent price action more closely. Here we can see the dip from last week, where the price fell from around $635 all the way down to a low near $608 on November 7th. The price then based for a bit before yesterday's explosive move upwards. The rally began right from the market open on November 10th, pushing from an open of $618.92 and barely looking back all day, closing near the session high. This shows immense buying pressure throughout the entire session. On this time frame, immediate support lies around the $616 to $618 zone, which was a pivot area during yesterday's climb. The key short-term resistance is yesterday's high at $624.31. A break above that level would signal continuation and open the door for a move towards the $630s. Conversely, if we start to see weakness and a break back below $616, it could indicate that yesterday's rally was a one-day event and that sellers are regaining control. Drilling down even further to the 15-minute chart, we can examine the texture of yesterday's rally and the price action leading into today. We can see a series of higher highs and higher lows throughout the entire session on November 10th, which is a classic sign of a strong trend. The volume was consistent, confirming the conviction behind the move. In the after hours and early pre-market this morning, the price has been consolidating in a tight range, mostly between $623 and $624. This is constructive price action, as it suggests the market is digesting yesterday's large gains rather than immediately rejecting them. Traders today will be watching this consolidation pattern closely. A breakout above this range, particularly above $624.31, would be a strong bullish signal for the day. A breakdown below $623 could see price retest lower levels from yesterday, like the $620 support area. So, let's recap the key levels and potential scenarios. The major, long-term resistance is the all-time high around $637. Immediate resistance is yesterday's high of $624.31. On the support side, we have short-term support around $616. The more significant daily support levels are at $598 and then down at the $570 to $580 zone. So, what are the likely paths from here? Our first scenario, which I see as having a 60% probability, is bullish continuation. The positive momentum from the government reopening and potential Fed rate cuts could continue to drive the market higher. In this case, we would expect to see QQQ break above $624 soon and begin a grind towards the all-time high at $637. This scenario is reinforced if we see broad participation across the tech sector and a calm bond market. Our second scenario, with a 40% probability, is a bearish reversal or at least a significant pause. The valuation concerns are very real, and this rally could be seen as an opportunity for institutions to sell into strength. If price fails to break above $624 and instead rolls over, breaking below the $616 support level, it would be the first major warning. A break of that level would strengthen the bearish case significantly, putting the $598 support level back in play. Keep an eye on upcoming economic data, which has been delayed by the shutdown, as it could introduce new volatility. Thank you for tuning in to Explain the Charts. Please remember, this video is for informational and educational purposes only and should not be considered financial advice. Always conduct your own thorough research and consult with a financial professional before making any investment decisions. Good luck and happy trading!